Yo, yo. Welcome, all you traders and investors. Today is Monday evening, approximately 7 p.m. Eastern Standard Time. And I'm bringing a video just to give you all a quick update on what is happening in both the stock space and also the crypto space. I want to give two big cautionary flags, indicators, if you will, that we need to be watching specifically this week and going forward into the future. And one of those is in the stock space, and then one of those is in the crypto space. Technical indicators that I want to show you tonight. Also, was thinking about giving a quick update on my plans going forward, but I think I'll hold off on that for a future time. Tonight, for the purposes of this video, we'll just cover basically what I'm seeing and what I want you all to be aware of and watching closely. All right, so here is our dollar chart, and you can see that we have completed a double check. The dollar closed just under this macro uptrend line, and that so far is a good sign. All right, we don't want to see any candles closing above this blue line here. We see that, then the dollar is going to become stronger than expected, and instead of moving in a downward to sideways direction over the next 6 to 8 months, then we can expect further upside for the dollar, which means further downside for the stock markets, and following that would be crypto. So not a good thing, but so far we are right on the edge, doing this double test of the macro uptrend and close just below that macro uptrend. So just barely, but hanging in there. And the reason, again, if you haven't watched my videos, I'm cheering for a weaker dollar, is because it will reflect positively in stocks and also crypto. Now, weaker dollar is not good for the U.S. macro economy in the long run, but neither is a stronger dollar. The Fed is now in a situation that they are between a rock and a hard place, and I don't think, I hate to be doom and gloom here, but I don't think there's any way to save this U.S. economy anymore. So it doesn't matter what the Fed does, and therefore, because it doesn't matter what the Fed does, I am cheering for a weaker dollar, only to hopefully benefit as many small investors and traders temporarily as possible. All right, so we are currently experiencing the prediction that I made many moons ago regarding a blow off top, and I do expect us to beat previous highs. Only will that happen if the dollar remains in its downward trend. Now, one thing I'm spotting here very quickly, see this purple line I got drawn? I'm just going to extend that real quick. Just spotted this while I'm rambling. Just want to see where that goes. And so it is possible, guys, that we go up and tag that. It's possible that we want to tag that and retest that descending or that downtrend macro trend line as well. That could happen. I'm hoping it doesn't, but I do see that as a possibility because this 200-day here is coming over to intersect, and often when we break below a major moving average like the 200-day moving average, Whether we go above it or below it, we do like to come back and retest this area here where the 200-day intersects this downtrend line. Is an excellent area of confluence for the bulls to take a pause, to take a rest, and the bears, the dollar bears, to take over again. All right, so that is one possibility I'm looking at, and that coincides, and I might as well bring it up now, with the indicator that I wanted you all to be aware of, and that is in regards to what I'm seeing here on the US 10-year Treasury. We have broken above a major downtrend line and continue to be strong. All right, we've tagged this purple level of resistance here and have come back down, but US Treasuries look to be very strong, and that is of course, negative sign for stocks, because that indicates the dollar will follow suit and continue its strength as well. All right, and I think that is true especially if the US 10-year Treasury breaks above this area right here. All right, we break above that, then the dollar will also follow suit, break above this macro uptrend line, and probably retest this macro downtrend line, which will be intersecting with that 200-day moving average at that interval. All right, so we do want to watch this US 10-year Treasury very closely, guys. This is what I wanted to point out. Along with that, of course, would be the 2-year Treasury. I meant to delete that circle, not go back. Hang on one second. Bear with me, guys. Now I'm going to jump to the 2-year Treasury. And you can see here we have this descending channel, which the 2-year Treasury has risen above, and we are currently tagging a major level of resistance, which was a previous pivot high here on the 2-year Treasury, and you can see we tagged that exactly about a day or two ago, right there. So something to keep your eyes on, because we break above that, along with the 10-year Treasury breaking above its level of resistance. And that means the dollar will break above its macro uptrend line, become stronger, and who knows where this thing goes, really. I'm hoping it stops here and just tags or retests that 200-day moving average, which would be perfect if it did that at the exact same time it retested this macro downtrend. We could kill two birds with one stone in that retest. All right, so that's what I'm looking at on the stock market. Let's just take a look here at the VIX. What am I seeing here on the VIX? The VIX has risen. All right, so instead of coming down and touching the underside of this bullish descending triangle, we're touching the upside again. We're testing the upside. All right, let's hope that doesn't break above, because that would also be a negative sign. But that was not anything that I wanted to discuss in the video. I'm just kind of revisiting for the sake of clarity. And I can see here on the US 500, see our macro uptrend. We are right here on support, using that macro uptrend as support, hoping to stay above that. But if the dollar continues its strength along with the US 10-year, US 2-year, we are probably going to break below that, come back down, test the top side of this macro downtrend, which actually is technically expected and would be something that we should hope for. We'd like to see a retest of these stronger trend lines. And you can see the 200-day is down here as well. We broke above that, so we could just come down and retest the 200-day. Remains to be seen. But these are cautionary flags, and this is a strong possibility into the future. Coinciding with that, I'm going to jump to the Bitcoin. First, we're going to look at the daily. Now, this was the positive that I have iterated in previous videos. And last Thursday, I put out a video. We were up here. We were at a neckline breakout. And remember, I stated, okay, it's not confirmation yet, this cup and handle that I assessed and predicted to occur is not legitimized until we have another confirmation candle or two. Remember, in crypto, I like to see three closes above a major trend line to really confirm price action going forward. Well, as soon as I put out that video, which was right here on Thursday night, released the video, and the sellers came in strong, took us all the way back down below that neckline. All right. Some of you traders were eager beavers, got in early, then got stopped out. That's why we wait for the confirmation, guys. If you're more aggressive, hey, all the more power to you. You trade, you do you. I'm not here to tell you what to do. I just recommend caution, especially in this bear market. And I like especially to see three candles of confirmation in a bear market when we're going long or when we become bullish again. All right, so we closed back below, and then the next day, Friday, we closed back above. Then we closed again, closed again, closed again. We've now got 5 candles closing above this neckline. I can solidly say that that is confirmation that this is a cup and handle pattern. That being said, cup and handle patterns, just like any pattern, doesn't have 100% a foolproof record, right? That's why it's just a measurement of probability. I'm not quite sure what the probability of a cup and handle pattern playing out is. Like, I know head and shoulders plays out 85% of the time when spotted correctly. Cup and handle, I'm not exactly sure what that probability is, but it is very high. But there's also that percent of chance that it doesn't play out, all right? And we go right back negative. I bring that to your attention because now on to the second negative indicator that I wanted to reveal tonight, and that is on the Bitcoin weekly chart. So I'm going to jump to another chart here just so we can see this 200-day moving average. And you can see for the first time in history, the 50-day or the 50-week moving average has crossed below the 200-week moving average, forming our very first on record ever death cross. All right, so that is a very negative pattern, but it is also a lagging indicator, meaning that just because we have a death cross does not mean we continue to go lower and lower. I mean, this very well could be the low point in crypto. We don't know yet, all right? What I do want to point out here is the fact that we're hitting our heads on major resistance once again. And that is circled here. The red line is the 200-week moving average, which we, again, for the very first time in history, have come below and remained below for quite some time. I mean, we broke it in March of 2020, our COVID pandemic, but that was just a wick down on the weekly. And then the next wick up moved us back above that 200-week moving average. This is the first time we've actually remained below the 200-week for a good period of time. So it's going to be quite some work cut out for the bulls to get back above that. And I suspect with what I'm seeing on that dollar chart correlating with the US 10-year and the US 2-year treasury, we may not we may not do that right away. All right. So if that 10-year continues to get stronger and break above that level of resistance I previously indicated, if the 2-year continues to be stronger and breaks above that purple level of resistance, that will lead the dollar higher, breaking it above its macro trend line and coming into resistance on the daily at the 200-day moving average. All right, that would then press the stock markets down. This is the S&P 500. The S&P would probably come back to retest that 200-day moving average, maybe even the macro downtrend, which would then lead crypto even further down from where it's at. All right, so back to the weekly here. Let's see what I see. Probably back down to this blue line, blue ascending line, which is actually drawn on a logarithmic time scale. So I'll put it back in log. Let's get a price here. Let's do this intersection of levels. We could drop all the way back down to 18,000, guys. Listen, don't shoot the messenger. I'm just telling you what I see on the charts here, and I'm telling you things that we do need to be cautious and wary of, even as we see a bull pattern playing out here on our daily Bitcoin chart. All right. Now, so yes, we broke that neckline, but guys, that cup and handle pattern here, I'm seeing something live on the fly. I don't look at these charts all the time. I don't stare at these charts, guys. I have a job, and this is just something I do on the side. But it's possible that this all right here, and I'm just going to draw it out to make it quicker. From here, this 25, what is that, 25,200? This whole thing right here could just be a cup, all right? And now let's say we come back down to the 18,000 area. Or even, remember, I said I wanted to see us retest that 200-day moving average along with this ascending trend line and this level right here. All right, let's say we come down here, all right? Maybe we are forming an even larger cup and handle pattern, all right? Yeah, I know I keep drawing these cup and handle patterns. But guys, when you're in a bear market, you just have to be very cautious. Even a break of this neckline here, I really would have just been cautious and dollar cost average in gently. All right. This is a longer term pattern and trend that I'm looking at. And we are not in a bull market yet by any means in crypto. So it takes a long time for these bottoms to form. I've seen this happen in 2018, 2019. It just takes a really long time for the bear market bottoms to fully form. And there'll be head fakes along the way, etc., etc. This is just something that we have to be cautious of. And we could, in fact, this could just be a bigger cup and just the cup forming here. All right. And then we still might have a handle to form, go down and retest that 200-day along with that level at 20,000, form our, a larger handle, which on a longer term time scale is very bullish. Anyways, guys, not to belabor the point, we're already 19 minutes and 25 seconds into this video, so I've got to cut it short for my trading view people who only get 20 minutes. And so on that note, just watch those two things, the 200 weekly moving average and the US 10-year and 2-year treasuries, guys. All right, until the next video, peace, y'all.